Good morning. This is Japanese Economic Review Channel. Today, we review yesterday's historic trading session on May 25, 2026. It was a landmark day for the Japanese equity market, as both the Nikkei 225 and TOPIX reached new all-time highs simultaneously. While the headline numbers suggest a broad celebration, a closer look reveals a highly concentrated momentum driven by specific global catalysts. Yesterday, the Nikkei 225 surged by 1,819 points, marking a three-day winning streak and closing at a record 65,158 yen. TOPIX also shattered its three-month ceiling, ending at 3,942 points. This rally was fueled by euphoria in the U.S. market, where the Dow Jones cleared the $50,000 milestone for the first time in history. Two primary factors drove yesterday's gains. First, geopolitical relief. U.S. Secretary of State Rubio reported tangible progress in U.S.-Iran peace talks, sparking a risk-on sentiment globally. Second, the AI frenzy was reignited by AMD's CEO, who announced an expansion of CPU production capacity to meet overwhelming demand. This triggered aggressive buying in semiconductor-related equities. Looking at the data from yesterday's close, the momentum was clearly inherited from the U.S. session. The Nasdaq's strength, led by gains in AMD, Qualcomm, and Texas Instruments, provided a strong tailwind for Tokyo. Meanwhile, the yen remained stable, consolidating in the 158 range against the dollar, allowing investors to focus primarily on equity growth. The market's energy was most evident during the morning session. At 10:44 a.m. JST, the Nikkei 225 hit an intraday peak of 65,408 yen, far exceeding its previous record set just a week earlier. This breakout represented a massive influx of capital, largely driven by index futures, as institutional investors repositioned for a new market era. Despite the record-breaking surge, yesterday presented a breadth paradox. While the Nikkei soared, 853 stocks on the prime market declined, outnumbering the 686 that advanced. This indicates that the rally was exceptionally top-heavy, relying almost entirely on a minority of index-weighted tech and semiconductor giants rather than a broad market recovery. A key takeaway from yesterday is the difference in execution between regions. In the US, the rally was characterized by spot equity buying. In contrast, the Japanese market was led by index futures, which eventually dragged the spot market to record highs. This suggests that much of the movement was driven by future expectations and speculative positioning, rather than immediate value hunting. Sector-wise, electronics and non-ferrous metals were the clear winners, led by Advantest and Tokyo Electron. Air transport also gained on geopolitical relief. However, mining and retail sectors contracted, with companies like Inpex and Seven and IHD ending the day lower. This sector bifurcation highlights the targeted nature of current capital flows. The optimism extended to the Growth 250 index, which hit a new year-to-date high. Investors flocked to space and deep tech leaders like Astroscale and Synspective, as well as energy AI plays like PowerX. While the broader market was mixed, these next-generation sectors continue to attract speculative interest as long-term growth stories. In summary, May 25th was not a rising tide lifting all boats. It was a targeted, index-heavy momentum trade concentrated in AI and semiconductor giants. While the 65,000 milestone is a historic achievement, the severe sector bifurcation suggests that institutional portfolios must remain selective in this new, top-heavy environment. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.